How you doing? I'm Big D. Welcome to the show. I appreciate everyone who stops in and gives me a few minutes of their day. Some of these do get long, and but I'd like for you to watch to the end. Silver is one of my favorites to watch out for. But when you have a day where all commodities, silver, gold, copper, everything you can think of, all the way down to crypto, the stock markets, everything crashed on Friday. It was a hard hit. It's still kind of unsettling. Some people that I know, they almost wanted to throw up. I know, a little dramatic, but it is what it is. But what's going on today is significant. What I want to share with you is very informative, and I think you need to watch to the end. Please like, share, subscribe, hit the bell notification for all if you like what you see. Don't look at this. I know it's a pretty face, but just listen. Something crazy happened with silver today, and that's not a coincidence. And JP Morgan is right at the center of it. Don't forget, JP Morgan has been busted twice, and they paid a huge fine on the last go round, almost $1 billion. But the data suggests that they just leaked their entire plan. I mean, you've seen silver crash before, but this one's definitely different. This time, a government mint broke before the crash happened. Just before. What does that mean for silver investors? And why is a bank allegedly insolvent heading into Monday? Well, let me explain. Don't forget my disclaimer in the description below. I am not a silver guru, not telling you what to buy, not telling you to go out and buy, not trying to tell you to and work you up to sell something either that you own. A source highly in the Federal Reserve clearance just confirmed that should send chills down your spine. A bank is now insolvent after Friday's silver crash. Now, we were talking about being underwater on some positions. Now, we're talking about completely liquidated, gone. This person told me that the contact that they haven't seen this or anything like it since 2008, except the situation we're facing right now is potentially 100 times deeper than anyone in the mainstream financial world can even imagine. And they're definitely not reporting on this that I've been able to find. And here's the terrifying part for most people: the markets are closed. Nobody knows what Monday morning is going to bring. Most investors are heading into this weekend completely oblivious. You have no idea what might be waiting for them when trading resumes. But silver investors, we're about to find out if this is the moment we've been waiting for. Now, remember, I believe it's Shanghai opens 12 hours previous to our market. Now, before we go any further, let me give you the context of what actually happened, because the numbers alone are absolutely staggering. Spot crashed as much as 35% intraday trading on Friday. It dropped below $75 an ounce, silver meaning. That was a little hard to take when it was just about $122 an ounce. To put this in perspective, this was the biggest day decline in 46 years. 46 years. We're talking about the most violent single day move in silver since the Hunt Brothers era. The financial media is calling it a collapse, a bubble bursting, the end of silver rally. The, the market is done, you know. But here's what they're conveniently not telling you. And this is critical for every silver investor to understand. Despite the historic intraday crash, Silver still closed the month, January, in the green. It's up 19%. The metal got absolutely hammered. It experienced its worst day. Intraday performance is nearly half a cent in a half a century, and it still finished the month with double-digit gains. But it gets better. This means silver has now risen for 9 straight months. 9 consecutive months of gain. That's not a bubble. Remember, June 2025, guess what it was per ounce for silver? $30. That's a structural shift in the market. That's a trend that no amount of paper manipulation can permanently suppress. Now, here's where the story takes an absolute wild turn. This is where JP Morgan essentially leaked their entire playbook. Anyone paying attention can see it. If you look carefully at the COMEX report, and I mean really dig into the data, you'll see something that should raise every red flag, especially for anyone who believes that these markets move on fundamentals. JP Morgan closed $1,959 silver shorts positions. They closed them at exactly $75. Not near the bottom, exactly at the bottom, a precious metal, silver, hit its lowest point and began reversing. Was this luck? I don't think it was luck. This wasn't good timing. This was a surgical precision. This was a trading desk that knew exactly where the floor was. And they knew it before the crash even happened. Think about what this means. The largest bank in America had more derivatives exposure than any institution on the planet. They closed massive short positions at the exact mathematical bottom. This happens during a 46-year historical crash. The exact moment silver stopped falling and exactly climbed back up, JP Morgan was covering shorts. This is their way of communicating without actually saying anything. This is the JP Morgan version of saying to the world, we're done suppressing silver. Time to pump. Their order flow just told us everything we need to know, especially about what's coming next week and for our future, I believe. Let me know in the comments if this is interesting and let me know what's going on in your head and what you're thinking at this present time. You think JP Morgan's timing was a coincidence? Or did they just accidentally leak their entire plan? I don't think anything's accident when you're at that highest level. I want to hear what you think is happening here. This isn't conspiracy theory anymore. This is right there in the COMEX data, right in your face. You could see this. Anyone willing to look and see at it, see what's going on, when the biggest player in the silver market closes shorts at the absolute bottom. And with that kind of precision, they're telling you something. They're telling you suppression campaign just ended. They're telling you that they flipped from short to long. They're telling you that $75 was the floor. And there have no intentions of letting it go any lower because they're now positioned for the upside. For silver investors, this is the signal we've been waiting for, to see JP Morgan doesn't make mistakes in these markets. They make the markets, and their trading activity just confirmed the bottom is in. The next leg up is about to begin. This is my belief. Can you bet on it? I would say no, but take what I'm telling you and look into it yourself. Take the details that I have given you and see if I'm right. And maybe if it feels all warm and fuzzy inside, maybe go and buy some silver if you can find it. Look what was happening in the market. You have major bullion dealers saying that they can't cover your your silver purchase for at least several weeks. And if you ask anybody around town if they would buy it when it was at $122, they won't buy it. Maybe they knew something like this was going to happen, this crash, but it's already bounced back. At the close of Friday, January 30th, 2026, it was already back up to almost $86. Something interesting right there, right? Now the next leg up is about to begin. But the story gets even more interesting, especially when you look at the physical silver market. While paper was getting destroyed on Friday, something unprecedented was unfolding in the real world. The Australians' Perth Mint suspended sales. They stopped selling their 2026 kangaroo 1-ounce silver bullion coins. This is one of the most respected government mints in the world. Now you might think, okay, a mint paused sales. So what? But here's the detail that changes everything. This decision was made Thursday morning before the historical $35 $35 crash happened. The Perth Mint was already at the breaking point. Silver was nearing $117 again from the 122 high. They were already so overwhelmed with demand that they had to stop taking orders. They even implemented monthly allocation systems just to ensure all regions get some stock. Their official statement to wholesalers said this: they have a large backlog of orders. They need to pause taking wholesale orders until February 2023 or 23rd until 2026 until further notice. This is to clear their back orders. Think about the implications for silver investors. If the Perth Mint was already breaking under demand pressure, that was at $117 on the way down from the 122 high. What do you think is happening right now at $85? We're talking about a $30+ difference from a level where they were already rationing supply. This isn't just increased demand. This is about to be a tsunami. Every investor who has hesitant about the high of silver just only a couple of days ago is now backing up the truck at $85 per ounce. Every person who missed the rally from $30 to $100 is getting a second chance. Every industrial user who needs physical silver is simply in supply at these levels. And the Perth Mint, a government-backed institution, is the first domino to fall, the first major mint to publicly admit they cannot meet demand. So the very question every silver investor should be asking is this: which government mint is next? The more importantly, what happens to premiums when multiple mints are rationing supply while paper prices are suppressed? This is where all the pieces start connecting into one coherent picture. It's a picture that explains why a bank might actually be insolvent right now. Think about the mechanics of what just happened. You have a massive short position in the paper silver market, positions where they're likely taking when silver was much lower. They were betting on a return to about $40. Then silver goes on a 9-month tear, climbing month after month despite every attempt to shake out weak hands. These short positions are getting squeezed harder and harder. Now the losses are mounting. But instead of taking the losses and moving on, someone doubled down. Someone believed that they could break the rally with one massive coordination slam. And that's exactly what happened Friday, looked like. I don't know if that's exactly what it was, but that's what it looked like. A despite attempt to break the bull market using overwhelming paper selling pressure. Drop a comment below. I really would like to know what you're thinking at this point, and tell me, did you buy the dip on Friday, or are you waiting to see the Monday morning what Monday morning brings? I'm really curious on how silver investors are positioning themselves right now. And remember, I'll leave a comment for you, I promise. But here's where the plan falls apart. While paper silver is crashing 35% in a single day, physical silver demand is exploding. The Perth Mint is already rationing. This happened before the crash even happened, remember. Industrial users are scrambling for supply. Silver investors who understand the manipulation playbook are buying the dip aggressively. The disconnect between paper and physical becomes so extreme that it breaks something in the system. Maybe a bank that was massively short, expecting silver to collapse back to $50, suddenly finds itself on the wrong side of the physical delivery squeeze. Maybe they can't source the metal to cover their shorts. Maybe their collateral just evaporated when silver held at $74 instead of crashing even further. Maybe $50 was going to be next, but somehow 74, 75 ish, it held. Whatever this specific mechanism, the outcome is the same: insolvency, complete liquidation. And now we're heading into Monday with that bomb ticking in the background. And this is where the JP Morgan timing comes in even more significant, especially for silver investors. They closed their shorts at the exact bottom, $75. They knew 75 was the line somehow. They knew physical demand would overwhelm any further downside. They positioned themselves for the bounce because they have access to information retail investors don't. They can see the stress is in the system. They can see which institutions are on the edge of insolvency. They can see the physical market breaking in real time. So when JP Morgan covers shorts at the bottom with surgical precision, they're not just making a trade. They're confirming that their manipulation just hit its limit. They're confirming that trying to push silver lower from here would break something too big to hide. They're confirming that the next move is up and they want to be positioned correctly when it happens. Now, the thesis that emerging from all of this is profound, especially for anyone holding physical silver. For years, we've talked about paper manipulation of silver prices. We've documented how a number of banks can move the price using massive derivative positions that have no connection to physical supply and demand. We've watched silver get slammed during thin trading hours with coordinated selling that defies any fundamental logic. But what if Friday was a momentum that was needed? Maybe Friday was the moment this system finally broke itself. What if the gap between paper and physical, between paper prices and physical reality became so extreme that it created a systemic risk? What if a major institution just found out the hard way that you can't keep shorting something when physical supply is this tight? The Perth Mint breaking at $117, $120 an ounce. A bank allegedly going insolvent at $75, and JP Morgan closing shorts at the bottom. They they only point to the same conclusion. The paper manipulation game just hit a wall and can't break through it. What does all of this mean for you as a silver investor heading into next week? First, if there's really a bank that's insolvent due to silver positions, expect some kind of intervention or bailout announcement. The Federal Reserve and Treasury Department aren't going to let a major institution collapse, are they? Some have said yes, because instead of bail out, don't they call them bail ins? You should look into that. That's another story, another video. But that something usually involves printing money, providing liquidity, creating the exact conditions to make precious metals more valuable. Second, physical premiums are about to spike hard. The Perth Mint is already rationing supply, and that was before the crash created a buying frenzy. If you're looking to add to your physical holdings, expect to pay significantly higher premiums over spot price, especially in the coming weeks. Now, the discount that you're seeing in paper prices isn't going to translate to cheap physical metal, unless you might find it local. But even if you find it local, most likely everybody knows what's going on by Monday morning and what happened on Friday. So it's a possibility you're going to see maybe a piece of silver going for 100, 120, 150. I seen some of that craziness going on when it hit 120. Now, third, and this is critical for silver investors to understand, this price disconnect represents opportunity. When paper markets are selling off in a panic, while physical markets can't meet demand and divergence doesn't last forever, actually, price has to reflect physical reality. Eventually, the fact that government mints are rationing supply has to matter more than what some algorithm does, especially during low volume paper trading. And when that reconciliation happens, the snapback in price can be solvent and fast. We've seen it before in precious metals, and all signs suggest that we're about to see it again. Fourth, remember that despite this historical crash, silver is still green for 9 consecutive months. This all began, I believe, right around June when it was $30 an ounce. Now that trend hasn't broke. The bull market is intact. You will definitely see this on Monday. I do believe we're going to see new record silver. And I'm not going to say it's going to be small. I think it might be huge. I do believe that we might be able to see our first $130 silver on Monday. I don't know, but it feels like it. Put it in the comment section. Let me know what you think Monday's market could open at. How about Sunday's Shanghai market? Shanghai could show you some details that might be impressive. But what we're seeing and what we're witnessing, what we witnessed on Friday, was likely the final desperate attempt to break the rally before physical reality overwhelms paper fiction or fiction. And based on JP Morgan their position, based on the Perth Mint's breaking, based on the whispers of bank insolvency, that attempt failed. The smart money is covering shorts at the bottom, not adding to them. That tells you everything you need to know about where we go from here. The key for silver investors right now is to focus on physical metal, not paper prices. Paper silver can be manipulated down to any level, at least in the short term. Big banks can create selling pressure out of thin air using derivatives, future contracts, but they can't create physical silver out of thin air. They can't make the Perth Mint suddenly have unlimited supply. They can't make industrial demand disappear. They can't reverse 9 months of consecutive gains with one violent shakeout. What they can do is create opportunities, especially for those who understand the difference between price and value. Monday morning is going to be a fascinating, so fascinating for everyone to watch the silver market. And again, I'd be watching the Shanghai Open Sunday afternoon, late Sunday afternoon, Eastern time. Are we going to get confirmation of banks insolvency? Are we going to see emergency Fed interventions? Are we going to see more mints announcing supply constraints? Are we going to see JP Morgan surgical bottom picking validate with a strong reversal? We don't know yet, but we do know is that something significant just happened in silver. The largest intraday crash in 46 years, combined with the government's rationing supply, combined with the biggest bank in America covering shorts at the exact bottom, combined with rumors of institutional insolvency, this isn't normal market action. This is the kind of chaos that happens. It's when a manipulated market finally meets unmovable physical reality. Again, comment below with your predictions. What happens on Monday? Are we going to see silver rip higher, or is this more pain coming to us? I'm going to pick the rip higher. New record highs. This is what I believe. And more importantly, which mint do you think will break after the Perth mint? For silver investors who's been stacking physical metal, who understands the supply demand dynamics, who've watched and manipulation playbook for years. This moment is exactly what we've been preparing for. The system is showing cracks. The paper price is diverging from physical availability. The big players are positioning for the upside in silver despite everything thrown at it. Closed January with its 9th consecutive month. The bull market is in silver isn't over. Not my belief. It's just getting started. And if the rumors about bank insolvency are even partially true, next week might be when the mainstream financial world finally wakes up and tells you what I've been talking about on this show. I hope not, because I'd rather you come back and get your information from me. Now, this market is definitely broken. And the only question is this: how speculative is the breaking going to be? Especially when physical reality finally overwhelms paper manipulation. But what is your opinion on this? Comment down below. If you're curious to find more, make sure you click on one of the videos in my playlist and check out maybe something that you haven't seen before or even heard of. And with that, we're coming to the end of this video. If you enjoyed this video, then turn on the notification bell, smash that like button so you don't miss any important silver updates that might make you lose money. So don't risk it. Also, please share this out with your friends and family, as many people as possible, especially if they're silver stackers. I do appreciate you stopping in, and try to be safe out there. God bless and be good.